Hi, I'm Austin Root at the 2019 Stansberry Research Investment Conference. I'm joined by Roddy Boyd, renowned financial investigative journalist who just presented at the conference. Roddy, thanks for being here.
Oh, hey, thanks, Austin. Great to be here.
Yeah, so you started it was really interesting. You were talking a lot about the pitfalls of investing when you don't have perfect information, and you talked about the buddy system. Maybe you could talk a little bit about that for our viewers online.
Sure. I mean, the buddy system is pretty basic. It's a human evolutionary shortcut. It's also not a bad thing. It's just the system of thousands of individual patterns, cues, tips, judgments, as quick assessments we make about a man or a woman in a foreign social or professional setting to judge whether, hey, this person's okay, or what this person represents is acceptable, it's non-threatening. And that's great. That worked just fine for us in the work environment or the professional, even family environment. We want to live next to the people we like. We want to work with people we like or feel comfortable with. We certainly want to marry or date or partner up with people that we feel compatible, connected, or sort of very similar to. However, none of those cues, none of those thousands of little intuitions are very effective in making an assessment of whether this person, this fund, this investment opportunity is going to be a good one for me over a given time horizon. And I see a lot of people get hurt, trip up on that.
Mm-hmm. And you focus, Roddy, on both public investments, publicly traded companies, and private types of investments. Are you seeing these types of red flags where you're worried that the buddy system isn't enough of a due diligence or research in both public and private investment opportunities?
I mean, I see it all the time. I mean, literally 24/7. It's what I do for a living.
Yeah.
I mean, there's a lot of things that I think make 2019, early October 2019, a very ripe environment for buddy system centric problems. So you have the markets, so at least the U.S. dollar-denominated equity markets are, a multi-year run, are very toppy. You've had a bunch of interconnected boomlets, cryptocurrencies and blockchain stuff and cannabis and lots of unique medical biotech type things, and sort of the conflation of the two, coupled with a cutback in regulatory budgets and mandate, leads for a lot of investment tears.
Mm-hmm. Roddy, we were talking about certain types of investments that maybe raise a red flag if it's a reverse merger where the company is now a cannabis company and it used to be a mining company and maybe it was a .com before that. Are there any other red flags you can kind of share with us in the audience?
Absolutely. Reverse mergers are 100% guaranteed to end in somebody's harm economically. Might not be you, but it'll be somebody that eventually. There's special purpose acquisition companies, with SPACs for short, almost invariably end in somebody doing pretty well with your capital as opposed to you doing well with your capital. And then, there are sort of unique one-off schemes that I talked about. Always be wary of when anybody guarantees you something. When they say, look, our targeted returns are 12 to 15%. Well, that's nice. That's your target. There's no legal language or connection to that. But when they guarantee you, 20, 25, 30% compounded returns, that's when you should find a reason to get the hell out of that meeting as fast as you can, because invariably there's going to be litigation. There's no such thing as guaranteed investments. Every investment carries an element of risk. It's what leads to return. If you want guarantees, simply buy a government bond and you're guaranteed the coupon. And that's, you're guaranteed a coupon, but even the rate of inflation can outstrip the coupon, so you're losing money on a rate of return basis.
Mm-hmm. Roddy, I was wondering if you could share for our audience, maybe if it doesn't have to be the actual name of the company, but what type of company or that you're working on right now that you think is potentially has those red flags and potentially could be fraudulent?
Yeah, I mean, I am doing a lot of work right now in element of medical biotechnology companies, pharmaceutical companies, looking at companies that have one or two drugs, with one drug being sort of predominant, being the primary revenue engine, where there is a demand from the top. The company is very vocal about increasing revenues, increasing market share. Where you see situations like where they make payments to doctors for advisory boards or consultation research assessments, and surely some of those doctors are doing that work, but you can be fairly certain that they're just simply buying prescription flow, order flow, and as a function of that, when those prescriptions curtail, or the doctor has a crisis of conscience, or there's regulatory intervention, you can look at that company's revenues and cash flows being rapidly put on a diet.
Mm-hmm. That's fascinating stuff. Well, thank you, Roddy.
Thank you.
And thank you so much for watching. Be sure to stay tuned for more updates and interviews.
Thank you.